Okay, task 4.18. In task 4.18, when you read the task, you will see that this year starts from the 1st of March and it ends on the 28th of February. You will also, from the last line, see that you are working depreciation out on equipment for 20% per year at cost price. However, in exercise 4.17, your vehicle was only one vehicle. So vehicles as an opening balances included all vehicles, was only one. Only one. Now in this exercise 4.18, when you look at equipment, that office equipment includes a number of different items, of which the cash register, needs to be replaced, and therefore we will sell it. Now it's important to understand when are we selling it. This cash register is sold on the 28th of February. Can you see that is right at the end of this year? So now we can take our 5 steps. Step 1, take cost price to asset disposal. What is the cost price? 6,000. Step 2, take depreciation. Calculate the depreciation for this year. So now you have to work it out for the whole year. That's why I put 12 over 12 years, so that you get into the habit of putting months there. That's the depreciation for this year. Step 3, take accumulated depreciation to asset disposal. The total accumulated depreciation. How do we work that out? That's the accumulated depreciation on the asset up to the beginning of the year. And if you read the sentence, you will see that they say the accumulated depreciation for cash register was 2,800 rand. And now we worked it out for this year. So the total accumulated depreciation on this asset, this cash register, is 4,000 rand. And now you're going to do step 4, the transaction. What is the transaction? If you read it, you will see that the transaction says it was sold on credit. So if we sell on credit, we're working with debtors control. This guy's name is Yakili. Okay? And we sold it on credit. What is the price? The transaction. We sold it for 1,700 rand. Okay. Now up to here, you know step 4. You know that you can work out your carry value. What was the value? What is it worth at this stage of the year? This cash register is worth 2,000. How do we get that? 6,000 rand minus 4,000 rand. Cost price minus accumulated depreciation give me the carry value. But we're selling it for 1,700. What do you immediately see? You are making a loss. How much? 300. Okay. Now let's remember this is just on the one that we're selling. But now we have to do another double entry as well. We need to also still work out the depreciation on the remaining assets, equipment. Again, 20% on cost. What it was 20% for the year, okay, because they have not been sold or added on, there was no new ones. And how much are the costs? 4,900? No, remember we sold one, which minus the cost price of the one that we sold. It's 6,000. So on what must I actually work the remaining asset is 4,600. So on 4,600 times 20%, you get that. Okay, these are the calculations and the steps that you had to do. Now let's take those steps and do the exact same steps in this time. I'm going to do it with you in the general journal. Now, in the answer book, they do it in another way, and we don't do it that way, so I'm just going to give you the right steps. Okay, there's your asset register, hey? Your asset disposal account. Step 1, take cost price to asset disposal. Step 2, take the total. That's not step 2. We'll calculate depreciation separately. Step 3, total accumulated. Now normally we want you to show us how you got that in brackets. Remember, it is the 2,800 plus the 1,200. You show it in brackets. That gives you 4,000. Step 4, debtors control, the sale, the actual transaction. Step 5, we've had a loss. Why? This was your missing one. This is your loss. Step 5. Okay, this is your asset disposal account. Now, if you were not to be asked to do it in the ledger, and I would ask you to show it in your journal, what would you have done? Again, the steps goes in your head. Step 1, so don't ignore what they have, because they have got it wrong. Step 1, take the cost price of the asset to asset disposal. So you take it out of the asset. You know asset disposal will be debited. So asset disposal debit, equipment credit. Right, the cost price. Step 2 is calculate the depreciation for the year on the one that you are selling. Depreciation debit, accumulated depreciation on equipment credit. Step 3, take the total accumulated depreciation to asset disposal, where? On the credit side of asset disposal. So, asset disposal credit, accumulated depreciation. If I only asked you to do this, you would have shown me here or here, how did you get it? I want to see the work, the added totals here, because you can get marks for part marks when you show it here. And then step 4, calculate the profit or loss on, where am I now? Step 1, cost price. Step 2, depreciation for the year. Step 3, total depreciation to asset disposal. Step 4, transaction. What was the transaction? It was a credit transaction. So you have debtors control debit, asset disposal credit. You learn it out of your head. Now when we are using the journal, we usually write the name of the person here, and because I'm using debtors here, I will also use the extra analysis column here for debtors control. Because remember, we add up our debtors and our creditors at the end. That's step 4. Step 5, determine the profit or loss on sale. How do we do that? We take the selling price minus the carry value. If the carry value is less than the selling price, we are making a profit. If the carry value is more than the selling price, we are making a loss. Right, step 5. There's your 5 steps for asset disposal. Now doesn't matter if you sell 10 things, for each one you'll go through 5 steps. And now your double entry for the remaining assets, depreciation debit, accumulated depreciation on equipment credit, and you're working it out at 20% on cost price. Right, so there is your answer to exercise 4.80.